The stock market just won't quit. September blew past expectations once again, and now everyone's asking the same question. When does this thing finally crash? Hold on to your seatbelts, folks. This is going to be a good one. We often say an investment, it's going to the moon. And while lately it sure does feel like the whole market may be in orbit around our lunar friend up there, every dip gets bought up. Every headline shrugs off bad news. And yet, despite that, everyone is still waiting for gravity to kick in. So, what do we do up here in orbit? Do we stash cash and hope to buy lower? Do we try to time the next crater? Or do we keep calmly dollar cost averaging while everyone else holds their breath? This month's challenge is all about investing when everything feels, well, too good. Because the truth is, no one really knows when the next correction lands, but how you prepare for it can certainly make all the difference when it does. When markets keep climbing, it's easy to feel like we're floating higher than gravity allows. But here's the tricky part: staying calm while everyone's arguing about how close we are to the crash landing. Typically, investors tend to fall into three camps when it comes to the scenario we are finding ourselves currently in. We have the cash hoarders. Those are those folks, you know them, they're sitting on the sidelines, convinced the crash is right around the corner. Then we have the dip chasers. They're waiting for that perfect entry that never quite shows up. And of course, we've got the consistent climbers. So those are the ones that are still dollar cost averaging, letting time do the heavy lifting. Now, I'm not saying one size fits all, but personally, I like to think of it like oxygen up there on the moon. You don't want too much cash, but you can't survive without a bit of it either. That may mean keeping a small buffer ready for opportunity while the rest stays invested and working. Because when the drop eventually comes, and it will come, I'll continue buying great companies at a discount instead of guessing when to start breathing again. So the goal itself isn't to predict the crash. It's to be prepared for when it does come. We're talking being calm, consistent, and having a plan that doesn't panic when the gravity when the gravity does eventually show up. A sub to the channel is the best way to stay grounded in future content. Let's get into the challenge portfolio. We will of course begin with the stocks that we have not added to in this cycle. We have a Bird Construction and they have a total return of 48.69% in the portfolio. Oh boy. This is what I've been talking about. We also have Canadian Natural Resources coming in at 6.55%. And good old CNR, oh boy, they're in the negative 1.35%. Believe it or not, that is a little bit of an improvement from last month, but I would really like to see this one back in the green. Moving on, we have Diversified Royalty. They're coming in at 48.38% total return. And good old Canoe coming in at 32.78%. Extendicare, 24.60%. And the Farron Technology Group coming in at 24.58% on that total return. Fortis looking strong, 34.07% total return. And one of my favorites, London Gold. Look at this, 77.95% total return. Gold is crushing it. There's nothing else I can say. Gold is simply crushing it. Looking at our pipeline ETF, BPLN coming in at 16.45%. Pizza, following that up at 24.22%. Last month we added Q-Day. They're sitting, I think it was last month. It might have been the month before, but Q-Day sitting at 8.11%. And the Purpose Solana ETF. Look at this. Look at this. 72.15% total return. Not too shabby at all. And we got Timber Creek Financial sitting at 12.21%. Our cash position, T Cash, sitting at 1.06% total return. And we have our iShares Capped Energy ETF, XEG, sitting at 12.15%. Just looking at those numbers, you can tell this month was crazy good. Well, let's look at what we bought this month. I added 20 more shares of bank, taking us up to 30 shares in total, and they've got a 4.5% total return. I also added 10 shares to HBTE, which is our Bitcoin Leaders ETF. Oh my, that takes us up to 80. And look at this total return, 97.51%. Holy banana bread. This one is almost doubled. Oh boy, this is fantastic. Looking at Harvest HHIS, we did add 5 more shares, taking us up to 55, and they have a total return of 30.34%. And I still have faith in Hammond, guys. I added 5 more to Hammond Manufacturing, taking us up to 65. And they had a good month. They're up 15.65% on our total return. Now, looking at Hamilton's RMAX, I added 5 shares, taking us up to 75, and that is a 9.41% total return. As you know, I love those REITs. I love those REITs. All right, taking a look at XST. So that's the iShares capped consumer staples ETF. I did add 2 more, taking that up to 10. Currently, we have a 7.27% total return on that. And finally, I added 5 more shares of XUT. So the iShares capped utilities. And that takes us up to 40 shares in total. And we get a 17.22% total return on that. I will mention, part of this buying spree was powered by some profits I took off the table. We sold out of Scotiabank. So we sold all 9 shares, a profit of $251.69. That's not too bad. A lot of that was, of course, rolled into HHIC and Bank, which both have some good financial sector exposure. Of course, HHIC, we haven't seen that yet. So let's look at the new additions, because I did add 2 stocks this month. We'll start with, no, we're not going to start with HHIC. We'll start with Air Canada. I did add 20 shares. Now, actually added it in 2 bunches. I had a stop loss set at $19 to get back into this trade. And that, of course, was fired. And that was 10 shares. Then I bought an additional 10 shares when they continued dropping. So that brings our adjusted cost base down to $18.33. And they are currently sitting in profit, 0.05%. So we do have, like I said, we have kicked off that new swing trade with Air Canada. I will be adding more any month they're below $19. I will then sell them. I'm going to hold on to them this time until they get to $22. That'll be my target. And then, of course, we have HHIC. We picked up 20 shares at $12.49. And currently, we're sitting at a 7.05% total return on that one. Let's take a look at how the overall portfolio did. So September, it was another strong green month. It defied expectations for sure. And the challenge continued to thrive for sure under those green conditions. So looking at the numbers, we did add another 500, taking our investment up to 13,500. The community added another $50 for a total of $1,127 thus far. In addition, we also received $85 from affiliate links. That was, of course, added into the pot. So definitely a huge thank you to the community for sure. When all is said and done, that added up to a $15,261 investment for the challenge. We also, of course, did receive $139.67 in dividends for a total of $1,299.14 to date. When we add in the dividends and the growth, we get a portfolio value of $22,045.51. That's not too shabby. When all is said and done, the challenge total return came in at 44.46%. Oh boy. I was not expecting to beat last month, but September certainly flipped the script big time. Okay, let's take a quick look at the portfolio's diversification with data pulled, of course, from the Blossom app. Speaking of Blossom, if you want to check in on the portfolio, I do have it uploaded there, and there is a link below to sign up for the app. So, according to Blossom, our top 7 represented sectors are industrials, 24.7%, energy, 20.4%, fixed income, 12.7%, materials, 10.5%, utilities, 9.1%, real estate, 5.7%. And look at that, financials. They've fallen quite a bit, 5.4%. But that's because I sold, selling Scotiabank certainly knocked them down quite a bit for sure. Okay, it's time to look at the toad and the goat of the portfolio for the last month. So we'll start Start with the bad ones. Our top 5 worst stocks this month are, well, at number 5, we have Bank. They had a total return of 6.84%. Number 4, CNQ, 6.55%. And those are good numbers. Number 3, T-Cash at 1.06% total return. Number 2, our Air Canada Swing Trade with a 0.05% total return. And our Toad, our terrible on any day of the month, is once again our only in the red stock, CNR, negative 1.35%. Okay, let's see who is topping the charts this month. This is going to be insane. Our top 5 best stocks are, at number 5, a diversified royalty, 48.32%. That's uh, normally that's good enough. That's almost good enough to win. But but it's number 5. Number 4, Bird Construction, 48.69% total return. Number 3, that Purpose Solana ETF, 72.15% total return. Number 2, and this was last month's number 1, London Gold. They fall into number 2, but they've got an amazing 77.95% total return. Oh boy, our goat of the month. And I think you guys all know which one this is going to be. It is our Harvest Bitcoin Leaders, HBTE, 97.51%. Oh boy, that's crazy. That's crazy. This top 5 is absolutely nuts, and let's hope it stays that way. And I certainly like to get excited about it, that's for sure. Tune into the next update when we will do it all over again and see how the market is treating the challenge. I am excited for sure to see where this is all going to go next. If you are interested in any of the stocks or ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on new Canadian ETFs. Thank you for watching, and I will see you in the next video.